Hi friends, so we meet for today's video. I think an interesting day of market action today, but we'll start from the global markets because a lot of things have happened in the weekend, and then we'll try to analyze what has happened from the Indian markets and what's the road ahead for us. So, US index, it had a great session on Friday. Almost all the indexes, whether it is Dow or Nasdaq or S&P, they closed above 1.6%. Uh, Dow almost had a rally of around 600 points, and it has a good session on that day. But a lot of that was due to the index rebalancing, which happens for those markets every quarter or every 6 months. So, not all the gains that were there were purely due to the market action. There were some gains due to that rebalancing of index as well. So, how much it is and how much is actual gains on the market, we'll probably see today in terms of that if all the markets correct and come to a reasonable level. So, today's market action will actually give you how the US markets are looking in terms of their future road. Now, the big talk of the town in the weekend was actually the meeting between Zelensky and Trump. It was a very premature meeting. I will not go into details. Many of you would have seen those in the video that were flashing in the entire weekend. But I can just give my inference on that particular video. First thing which I felt was, see, Zelensky, whatever it is, he's a president of a small country or whatever it is, but he has come to your country on your invitation. He's your guest, and any guest, you cannot treat him in that way. That too in front of public meeting, in front of press people, and all those things. And the videos are allowed to go viral, and they're flashing on YouTube or other media channels or whatever it is. That shows the arrogance of this person, Mr. Trump, of his cabinet, and probably of the country. The feel they want to give to the world is that they will live in a particular form of the dominance, and they will try to dominate the smaller countries and allow them or make them bend on their knees to whatever is their demands. That is what they're trying to achieve with the tariffs as well, and that is how they gave a message to Zelensky and the world that this is how I'm going to treat the smaller countries. See, you have the might, you have the power, but that does not mean that you start crushing these small countries. See, all these countries are sovereign countries. All these countries have their own independence. They have their own people. They have their own life. They have their own a set of environment. But we are all crushing those things. And the way Mr. Trump is trying to negotiate this Russia and Ukraine deal is that you both, especially Zelensky and Ukraine, to bend on his terms, to give up everything what Russia wants, and then probably he will, held his head high and say that I was the reason to end this war. And if you will crush the weaker person, and it will you will admit all the demands of a stronger person, that is not mediation. That is not a kind of war, kind of a closure that you want, because then that will not be a good closure at all. He always talks about, I'll take a land from Greenland, I want to rename it. He wants to take the hold of again the Panama Canal. He sometimes says that I want to take ownership of the Gaza Strip as well. So we don't know what kind of aims, what kind of what kind of actually his needs are, and it's looking like it's more of a personal need rather than a country need. The kind of real estate, uh, you know, domination that he has, the kind of inclination that he has for all these things. A news was flashing that probably he wants to develop a big real estate in Russia, and that's why he want to come close to Putin. Some media reports are saying that they have a lot of money trails to Mr. Trump, and that's why he is going in front of Putin to end this war. So there are many theories out of it, many controversies out of it. We don't know what is true and what is not, but the message to the world is that they will dominate and try to bring people on their knees, and that's not a good news for the world. Now, Zelensky, of course, he was. I also felt there was a mistake from Zelensky as well. He could have avoided such kind of inflammatory remarks. But anyways, that is what he is. But the kind of questions on his attire, and again, you rubbing that you are weak, you have everything to lose, you're winning, you're losing this war. I think that was premature, and we don't expect this kind of meetings to happen between two great nations, two big nations. So that was very unfortunate. Zelensky, on his return, of course, went to EU. That's the only shelter now he has. And probably a loan has been sanctioned from UK, I think. And probably Europe, most of the European countries are anyways with Zelensky. They are still supporting Ukraine. That's the only support now he has in terms of world support. So that is continuing, but again, the shift of power, and it is also creating a dent between Europe and America. And it's looked like the political power and the economic power. See, why I'm telling all these things is not because of political power. We're not interested in political alignments of the countries. We're interested in economic alignments of the countries that affects our stock markets. Political alignments don't affect us. So the kind of economic shift also is looking like it will turn more towards America, Russia rather than America and Europe, and that will be slightly, rebalancing of world trades. And that is what I've been always telling. This all tariff war, this all Trump coming into power will redefine your supply chains, redefine your trade volumes for different countries again. It will not be the same kind of trade which was happening for many years. For some countries, it might continue, but for some countries, it will change entirely. So that is what it is, and that's how he's getting some support from Europe. In terms of U.S. markets, a good PC number came on Friday. That is personal consumption expenditure number. This is a number which the Federal Reserve from U.S. tracks very closely. It came around 2.5%, which was in line with them, and it shows that the inflation is slightly coming down. This was rejoiced to the U.S. markets, and we saw a rally into those markets. The part rally of that was purely due to this particular factor. Because of that, the bond yields came down again very sharply, and now we are trading in terms of bond yields for around 4.23, 4.24%. So we are way down from 4.8 levels, with just as soon as Mr. Trump came into power and this tariff war thing started. It is now trading well below it. It's around 4.23. It's became quite benign now. I think the lowest we have seen in last 4 to 5 months after the interest rate cycle cut has been started by Fed was 3.8%. So we're just 0.4% away from it. So in that way, I think a good cooling off has happened in terms of bond yield, which is again a good news for the emerging markets. And the dollar index again cooled off. It's now around 107.3 kind of levels. So it is also consolidating between 1.06.5 to 1.07.5. So it's consolidating in that range, but it's not inching forwards. And many of the economists are now saying that 110 level, which has been formed by dollar index, it will probably stop out and will not touch those kind of levels again. The reason is very simple. A shift happens. So as soon as the dollar index starts going up, it will become difficult for Trump to impose all the tariffs and all. He wants the dollar index to remain low. He wants the dollar to remain weak. But so that's the reason why if these factors become strong, the tariffs war will start coming down. If these indexes start coming down, you will see tariff war going up. That's a balancing trade which will happen going forwards. Now, one more interesting thing which came from Atlanta Fed. So this Atlanta Fed, they work on these GDP numbers a lot, and what they have given the numbers projection for this quarter, which is calendar year FY26, FY25 first quarter. Now they are seeing the activity of January and February, it is looking like this quarter GDP growth will be minus 1.5%. They are seeing huge contraction. They are seeing huge contraction in the consumer sentiment. That is how the consumer confidence number also coming down. We saw a number from Michigan University also, which was showing that the consumer confidence is coming down. And this particular department of Fed, which is from Atlanta, is showing a contraction of 1.5%, which again means that will give a room to the Federal Reserve to cut interest rates if at all the tariff war remains benign. So that's again a good news, and that's also was the reason why there was some downfall in the bond yields and dollar index as well. So that's another good thing which we should keep in mind. And as soon as the growth numbers of US will start coming down, India will start looking attractive in terms of relative growth between US and India. See, as of now, what was happening was US was growing at around 2.8%, 3% in terms of GDP, and our currency was getting devaluated by around 4 to 5% every year, which means effectively 7% US was growing and 7% anyways we were also growing. In fact, we were growing at around 5.4%, the large GDP number came. So that was the differential of growth was not there. But if US starts coming down at around, I don't know that these are estimates. We'll have to wait for the numbers to come. But if at all they start contracting down, so already the showcase number for the year is now 2.3% for US. So if it starts contracting down towards 1.5 kind of levels, India will again become very attractive. So I'm just giving this information on that relative basis. Now, so again, the tariff, we had some outcomes in the weekend as well. What Mexico has told is that we will try to match the tariffs of what China is doing for US. So we'll try to match the tariffs in that way, which will now not allow the US imports which were happening through Mexico. So China was importing, or let's say exporting its autos, vehicles, and all those things through Mexico and Vietnam a lot, apart from other countries as well, but these two majorly. And that is how the vehicles were routed to US because of the sanctions which Mr. Trump has put in his first term to China. Now Mexico is then will match those tariffs with you. So now the China would find difficult to send their vehicles from China through Mexico to US. That is what Canada has also told, that we'll also try. We're also figuring it out, and we'll also try to match those figures. So I think some 24 hours extra has been given now to these two countries for that. Probably we'll have tariff from 4th March onwards now, 5th March onwards now. So if that happens, probably then we might see a halt in the tariffs for Canada and Mexico once again. This is just an indication. There's no confirmation as yet. This is just some kind of news which is floating. This is some kind of a negotiation which is going on between Trump, Mexico, and Canada. But we have to wait for the results. We have to wait for the confirmations. But that is how one development is going on, and we have to see how it turns out to be. So the China again has shown a resentment in terms of tariffs being hiked for China. There was a national conference meeting for China which has started today. This conference will set the target for GDP for the entire year and inflation target. It is expected that they will set a target of 5% GDP growth for China for this year, and they will also set a target for 2% of inflation, which was down by 1%. Last year, the inflation target was 3%. Now the inflation target has been set for only 2%, which means they're into deflation, which means that the prices are coming down, which means that there is overcapacity, there is less consumption, the sentiment of consumer is extremely weak, and China internally is struggling a lot. And if this tariffs again starts imposing on China, it will even be more scary for China because they not be able to have those kind of earnings which they earn from their exports. So internal consumption weak, and if you are not able to put exports also, then this kind of big economy will start buckling down. It will start cracking down. But that is what is happening in China. Against that, our GDP number came, I thought, pretty decent, not very exciting, but pretty decent. Came around 6.2%. Remember, we are not into deflation phase; we are into inflation phase, and our inflation is going at around 4.3%, which gives us a 10.5% nominal GDP growth. So we should not only compare a growth of actual GDP. We should actually see how each country is going in terms of nominal GDP. So we are growing at 10.5 or plus of nominal GDP growth now. This number was expected around 6.3%, but it came at 6.2%. The two good things which has happened, apart from this, is one is the last quarter GDP number, which was 5.4%, has been upwardly revised to 5.8%. Whatever numbers these come, they're all interim estimates. The final GDP number only comes when the year is over. These are all the interim GDP numbers. So that is why they keep on changing. So the last quarter GDP number, which was 5.4%, has been upwardly revised to 5.8%. This quarter GDP number has come to 6.2%. The fourth quarter, its last quarter GDP number of FY 25-26 is expected to be around 7.6%. So we'll again see a 1.4% kind of a jump in fourth quarter if the numbers meet to the estimates. That is how you're seeing the earnings also. The Q2 numbers earnings were bad. This year earnings were good. We were touching around. We already touched around 6.2% GDP, higher than the Q2 number. And if at all the Q3 numbers pan out to be the way it is, we'll see good results from our internal domestic consumption based companies in fourth quarter, and which will give a good jump for us in the April, May, June quarter. Anyways, April we have a RBI policy again, and we will be expecting a second cut from them again. All these things matching to a good thing. So that was a good news in terms of GDP number. Our inflation numbers are anyways benign. We are around that lower target band of RBF around 4%. Now, one more thing which happened in terms of US and Zelensky was that the main work which Zelensky actually went for US was to sign the Minerals Act. That did not happen. In all these show sharaba, actually that lost out, and the mineral deal was not signed. So I don't know what exactly thing they wanted to achieve out of it. One more thing which was flashing on the news and some news articles is that China and Russia are actually engaging or trying to engage the thrown out Fed officials. So you remember that Mr. Elon Musk has been made the head for government expenditures and all. He's being throwing out people from Fed and other government departments. I think over 1 lakh people have already been fired from government department in US, and the overall number which they want to cut down cumulatively is around 20 lakhs. Now, China and Russia are trying to absorb these people, are trying to find these people and give them job offers because they believe these are very experienced people. They know how the US government machinery works. They all know how actually know the economic pillars, how you are to bring your economy into a stable shape and all those things. So they want those experienced people, and China and Russia are looking for it. They are scouting for it. So that's the bad thing for a country like US, that your people are being hired by somebody else. They know the importance of your people, but you also don't know, and that's extremely bad. One more thing which has happened in US with this thrown out people is that around 300 people were fired from nuclear departments, and once they were fired, they found it very difficult to function. Uh, you know, uh, they find it very difficult to function without these people. So they were actually called back again. So what is happening is no a kind of immaturity, the kind of non-experience with this particular cabinet is showing. This is how these things are coming out, and they don't want to listen. They don't want to observe. They don't want to analyze. They want to first take action, show to the world, and then see okay what are the effects and all those things. So Elon Musk, with this kind of person, you will always expect these kind of things, but that's how they are going, and that's not a good news. So you don't want your government people to be thrown away. Those are your treasures. Those are your people who have a lot of domain knowledge. See, uh, I have also worked in government department. I worked around 9 years in BEL, Bharat Electronics Limited, and I worked in private industries also like DLF. I worked in L&T. I worked 10 years in private industry. I worked around 8 9 years in government machinery. I know both the industries very closely. A private company has its own set of advantages, and the government company has its own set of advantages. You can't yes, there is overcapacity in government department, but there are overcapacity in private also. It's not like that. The kind of information, the kind of the expertise which these government people gain after years and years doing the same kind of work is actually huge. And don't forget, in India or maybe in other countries also, the best of the talent used to go in government departments. So when I was working in BEL, I used to find my seniors, maximum seniors from IITs. Somebody from IIT Bombay, from Kanpur, from BHUs and all, and they were extremely intelligent. So the kind of systems they have made, the kind of knowledge base they have made, it's huge, and it's uncomparable. And if you start throwing out these kind of people, you're actually going for a big loss. You don't realize this once you throw out these people. But when you start running your machinery without these people, you'll try to understand the importance of these people. And I'm not saying there are not excesses in government department. Yes, they are. I do believe that only 50 60% people work in government department, but even private also have worked very closely, and there are excesses. I mean, not as equal to a government department. There are excesses, but that does not mean you start firing people. You are losing a lot of good information, a lot of good base, and that's what US is doing. I'm all the best to them, but I don't see any advantage in it. You can do it in a gradual manner. So what, like for our company, what they did was that they start recruiting slowly, so that allowed the senior peoples to slowly retire and go away. But there was knowledge transfer also to the younger people. But since the younger people were coming less in number, so automatically you were able to curtail your strength in gradually in some years of time. That's how government department actually work. I don't know how US wants to work, but it's not good. Now, I have some numbers from sales of vehicle sales also. Probably would have seen on the televisions and other report, but I'll still just give you the numbers. So Maruti has not done good. They just pretty. They're on 1 to 2% growth on YY basis. Tata Motors have not shown good numbers at all. They're on 19% down from YY basis. But the numbers have been good from Mahindra. Mahindra, excellent set of numbers, both in tractor business, both in passenger vehicle numbers. Very good growth YY basis, and they're able to beat all the estimates. Again, Eicher Motors. So Royal Enfield is doing extremely good, both in terms of export and domestic consumption. I think 19% YOY increase is what is happening in Eicher Motors in terms of vehicle sales number. TVS Motor also has shown a good, decent set of numbers. Hero Motorcorp again has not shown good set of numbers. So a mixed bag you can see in auto numbers, but again from a higher base, we're able to maintain the numbers. It is showing some kind of strength in auto. So I will not say that the numbers from autos are pretty bad. It is giving you a glimpse of recovery, and especially on the rural segment once again. That segment is working out extremely good. So that's another number which came for the country was for the GST number. The GST number is showing a 9% increase from YOY basis in the previous year. Now the GST collection has been 1.84 lakh crore every month this year. Again, good decent number. So our GDP is growing at around 10% nominal GDP, and your GST collections are also showing the numbers according to that. If at all they start growing at around 12% or so, it becomes even more good for us. But we should understand the base is increasing again and again, and that's the reason why probably you will see some kind of moderation in these numbers. But we expect these numbers to be at least equal to the nominal GDP number, which is around 10 to 11%. So if that is maintained, it is even good for us. Brent crude has been pretty decent. It has again came down. It's now trading around $73, so there's no issue at all. So crude, dollar index, bond yield, rupee again it was 12 paisa stronger today because the dollar index going down, bond yield is going down. So again a decent number from there also. So all these parameters are now set, and I don't think the selling which is happening now in India for the FIs and all those things is just because of these parameters. I think those all are, are fairly set now. They're not moving here and there. The range has become very slower now. Our PMI number also came, it was above 50. I think it came around 1% lower than the estimate. I think around 55 or so, and we are expecting around 57. We can check the number, but that's what I recall. Now, the talk of the town was again a big sale number which came from FIs on Friday. They have sold around 11,600 crores of cash, and this was slightly compensated by the DIs, which bought around 12,500 crores of shares. But it was a massive, massive selling in terms of cash, and this is after the MSCI readjustment. So the MSCI readjustment has happened for around 8,000 crores positive inflow. So if at all after the positive inflow, if we are seeing around 11,600 crores of net selling, which means the selling would have been around 19,000 crores odd. It was huge. But the silver lining, which I thought was they have bought stock futures, so they are buying in terms of FNO again. Index future they have sold, but not much. Around 2,000 crores index selling they have done in Nifty, which is slightly giving us confidence that probably some kind of revival, some kind of. Anyways, at these levels also, if we don't start forming bottom, then I don't know where we'll form the bottom. So we should not talk about those numbers. But the selling has been very intense. Very intense. Today also, the HDS Nifty was showing green. We were around 80, 90 points up in terms of HDS Nifty, but same thing happened. 15 minutes, we just survived in green. Then we had a massive selling once again, huge selling, and Nifty was down around 0.5%. Bank Nifty was down around 1%. Small cap and mid cap were down around 2.5%. But then the recovery came. Then we slight recovery came, and again mid cap actually closed in green. So it recovered all the losses of around 2.5%, around 1,100 points loss they've recovered. Even small cap at one point of time was trading around 400 points lower, but it recovered a lot, and I think it closed down 0.6% or so lower. So, and the recovery was more than the Nifty. Nifty actually closed in red. And that is what I say. Even after so much of fall, even after so much of, the way the stocks have been battered, if at all the market will start rising, you'll see the small caps and small mid cap rising even faster. Even whatever happened, whatever the kind of setbacks that people have seen in terms of their stock prices and all those things, still you will see a mid cap, small caps probably outperforming again Nifty and Nifty at least on a broader basis, because people believe there are less intervention from FIs in these stocks, and FIs, we don't know what kind of mood they are. Now probably none of the theories are working for it. Why actually FIs are selling so much, we don't know. One theory could be that the hot money which came, it came only around those election results. So I think on 4th June, where we had the election day, we made a intraday low of around 21,200, or we closed around 21,800 kind of a thing. And next day onwards, if you see from 5th June onwards, we started seeing a lot of FI activity into our markets. A lot of money which was kept on sideline, which was waiting for a political outcome, a good stable government, started entering the Indian markets. So probably they entered from those 21,800, 22,000 levels, and then the market rallied around non-stop 4,000, points, around 26,300 we went, and that probably that all hot money is now leaving out. So technically, technically and theoretically and whatever we can analyze, probably the 21,800, 22,000 is the levels from where those selling should stop. Ideally, if we assume that that was the hot money which is causing this downfall. Before that, anyways, FI was sellers. FIs were not buying into our stock. The reason was that time it was given that they are waiting for the outcome. They're waiting for the political scenario to be more clearer to them. So we can assume that before that we had stable money in FIs. See, FIs are not traders. Not all FIs are traders. So even if US traders are or hedge funds are taking out money from India, which we call as hot money, but there are a lot of sovereign funds, there are a lot of pension funds, there are a lot of banking funds, there are a lot of insurance funds, and they all come from Canada, Norway, UAE. Some come from China as well, Japan a lot, Europe a lot. So it's not that all that money has to go away. Yes, if people feel that US probably as a good destination for parking the money, then probably that money can move out. But the stable money, which has always remained with India for a long-term structural story, that never goes out. That still remains with India. And with the kind of GDP numbers which has come again, so it is again showing you that the trough has been made. The GDP slowdown which we saw, the blip that we saw on 5.4% last year, anyway, that has been revised to 5.8% now. So trough has been made now, which means that the bottom has been made, and probably the recovery has already started. Whether the recovery is full-fledged, whether it will sustain, whether it's a long-term scenario, we'll have to wait and see. But at least probably all the economists feel the bottom has been made, and now we'll see better numbers from here. How much we'll be able to sustain, whether we'll be able to sustain below, above 7% quarter-on-quarter consecutively, we have to wait and see. But we all feel that the bottom is done in terms of the GDP growth. So if the bottom is done in terms of GDP growth, then I think the bottom is done in terms of our bad earnings also, which is domestically driven. I'm not saying based on the external factor, because they will keep on affecting us. They will keep on affecting us, especially considering that the tariffs and whatever Trump is trying to do, etc., etc. But overall, this hot money has now technically has moved out, and now you will start seeing more stable money into the country once again. The reason why I'm saying this is today again I was seeing an interview from Chris Wood. So last Friday I mentioned you a small interview from Mr. Rogers, who's again investing a lot into emerging markets. Then again Chris Wood, who's from Jefferies, and he also tracks a lot of emerging markets, and they're now investors, and they've been invested in emerging markets from long years. So what he told was just 3-4 bullet points were tell you. US market is extremely overvalued. They're not investing anything in US. Indian markets looking very good at these levels. He's surprised at the kind of FI selling which they're doing at these levels now. And he's saying the India is into a structural growth, and the U-turn, or the, let's say, the trough has been made, and the recovery path has already been started. And moreover, the biggest structural story in the entire world put together is only India. That's what he told and reiterated again and again. So I'm just telling you 3-4 times things which this Chris Ford has given, which is from Jefferies, and that's why he remains extremely bullish on India. So when these people start becoming bullish, these are advisors. These are people who are advisors to many investment groups, PMS groups, again banking firms here and there. So we start getting good money. But when I say good money, is the money which will remain invested for India for many years. We don't want this hot money to come in and go off, which is the hedge funds money. When they see momentum, they start entering into a country. When the thing is over, they'll start taking out the money. So we don't want that kind of money. The stable money which remains invested for many, many years in India, that money will start coming down, probably now start coming to India as soon as this selling stops and we reach to a reasonable level. Today, I think the market actually tried to defend those 22,000 levels, and Bank Nifty also, we defended those, at least on a closure basis, we defended those 47, 900 levels which we made on January 27th. We closed above it. So technically, again, the market has not become so bad, at least at these levels. But the buying, or let's say aggressive buying, only can be done when we start closing above 22,500. As of now, we can still remain short with the stop loss of 22,500 because the market sentiment is still weak and the market confidence is still weak. But some kind of probably a good thing happened today in terms of that recovery which happened in the intraday, because for so many days what was happening is once we start going down, we were not seeing recovery. We saw recovery from 22,800 7 times, if you remember. We used to go to 22,800, 22,750 levels. Again, we used to rebound to 23,000, just short of 23,000. This happened for 7, 8 times. We did this for 2, 3 days on 22,500. And now we might do this on 22,000 3, 4 times. Eventually, we may break 22,000, or we might break 22,500 and go for a next level of resistance, which is 22,800. So we'll have to see how the markets perform and how the things happen. But this is the small range which the market will try to trade. On the upside, as of now, 22,500. On the bottom side, it looks like 21,800 to 22,000. That's the support which we have. Resistance what we have is around 22,500. The market should trade in between those levels until unless we find some again a good factor to take our markets forward. Markets have seen good news. It's not that market has not seen good news from last 1 month, but market is ignoring it. There was immense pressure, immense selling from FIs. Today's numbers again will be important because what I thought was today Reliance was targeted to manage the index, and Nifty Bank was targeted to manage the index. I think probably the market wanted to do short covering. So if let's see how the FNO data comes. Since they've sold the Reliance and HDFC Bank again by around 1.7% was down. So they've sold the bigger stocks. So you will see again selling in cash. It's not that we'll see some positive numbers in cash selling, but we might see some again stock futures and index futures buying. That might happen. Like it happened on Friday also. Even after selling those 12,000 crores of cash on Friday, we had those buy numbers in at least in stock futures, which means their FNO position they're starting to add. So today's number will again be important at this point of view. So you should watch out those numbers. If you see some kind of futures buying and index buying again, cash again will be negative because of Reliance and HDFC Bank. They've sold those stocks a lot. But since it was IT, there was a buying and probably a lot of shorts were there in IT. Probably and today, IT index anyways are closing green. Most of the indexes today is closing green. So mid cap eventually closed in green, IT closed in green, pharma, auto, even FMCG. So all the indexes apart from Reliance and I would say Bank Nifty, those bigger two weights were actually chosen today to keep the index managed. Otherwise, I thought we were not too bad in terms of market action today. The reason was probably the kind of recovery which we saw, and IT again, from the bottom level, it was trying to cover up. Auto also, if you see, so Tata Motors have given bad sort of numbers, but it's closed in green. The reason it has been battered so much, 1150 rupees stock is anyways trading at around 620, 630 kind of levels now. So even if it is giving 19% down YOY growth in terms of market degrowth in terms of vehicle sales, but I have been punished a lot. We already brought the stock 30, 40, 40, 50% down. So in that way, the numbers, the price would look still better, even if the numbers are not looking good. So overall, I thought the market bet today was not so bad, and the kind of especially at the recovery point of view. Watch out today those FNO numbers in terms of stock futures and index futures. That will be a key thing to watch. Cash, anyways, will still have a selling. But I feel that the market will spend some time on 22,000 levels. It might happen that what we had on 22,800 that we spent there 6, 7 days and eventually we broke down. That might also happen. Or if we think or we believe in the theory that now we are given the entire rally which happened started from June onward for 1 year, we have given entirely those rally. That probably hot money which came in has been, probably gone out of the system. If we believe on those theories, probably we might see this is the bottom, and that will only come to know when we start crossing at least 20 to 800 kind of levels. And then we can look back and say that, okay, the bottom has been formed. It was at 22,000 kind of levels, but that only time will tell. As of now, we can't conclude that. So let's work on these theories and try to keep a close watch on the FNO levels, FNO activity of FIs. They will first start buying in stock futures, then they start buying in index, they start taking long positions, and then you will start seeing the cash buying. The cash buying will be the last. That's how the people generally do. And they will start doing a lot of put writing on the lower levels. That also we can start, but that data does not come whether it is FIs or who are doing it. But we'll see. I think today also 22,000 we have seen some kind of put writing. The way we have defended 22,000. 21,800. Anyways, we had put writing around 1.2 crore shares are already at 21,800. So it's a good base. I think at today's market action, we would have seen some put buying on 22,000 levels also. We'll be getting the numbers today evening. We'll see those numbers. But keep a close watch on these numbers. Overall, I would say today's market scenario, market action was not bad, but we expected all the news, NHS Nifty and international news were giving you a scenario to go ahead. You did not go. That's fair. At least we didn't close too badly on the index. That's the small, positive we can derive out of it. So that was the analysis for today. Thanks for watching the video. Thank you so much.